over and talk about this XLE. This is the energy index. We played this about a week ago, made some really good money, 60% in like 3 trading days or something such as that. We got out of it. This is another short-term play. I like to play these as short-term plays. This is about 30 days. It's 29 days. I want to be around that 30-day mark doing this, selling the naked put, collecting at least $100. So I would let this come to me. When I was looking at it earlier, it was trading at the mid was 103. So maybe this will drop back down a little later in the day. So if you're interested in this one, selling this 103 would be a good trade to own. If you're okay with owning this, and then you take ownership of the shares if you have to, and then you sell aggressive covered calls from it. This is a income play. You're not trying to keep this forever. You will if you have to take ownership, you'll sell aggressive call to hopefully get out of it for your shares to be taken away, but you win if it goes up. All right, so the next trade I was looking at this morning, we're going to jump in some of these futures now. We have this is the yen, the Japanese yen. This is the currency. You can see that it tried to make a comeback a little bit here based on how much it was dropping. You can see there it was dropping a lot, and then it came back, and then it started dropping again, and then now it's dropping it once more, and it's below its 50 and way below its 200-day moving average, which is this, right? So I would be bullish on the Japanese yen again. If you played it before, I'm sure you won on it. You got in and out of it with a 50% win after fees and commissions. That's the same kind of concept that we want to do. We get out of everything at 50%, after 50%, including fees and commissions, if it's not the stock indexes. Okay, so you want to increase your probability. If your probability is 75%, as they say, at expiration that you're going to win, if you get out of it sooner, that probability increases. And usually we're way over the 80s when we are trading something. All right, so looking at this here, let's go over to this 6E here and the TastyWorks platform. I do not have this geared up. I thought I did, but let's go with 36 days. And we're going to sell the 89 here, as was as a 14 delta. We're going to buy like 1 point in this in this type of currency, 1 point lower, and we want to be at 9. So you're going to let this come to us. It was at 9 earlier. So I like this trade. If you can get filled at this trade, you'll get $100 over 416. This is a really good return on your capital type of trade, and you're betting that it's not going to fall too much more. If it does, you still got some room for it to fall a little bit there. All right, so the next trade I have this morning, everyone, and it's looking at doing the RTY. It's down this morning, and the first one I have is for a small account under $2,000, looking at 43 days to go, and selling the 1970 on the put side, because this is down, and I don't think it's going to go too much more. But if it does, you still have a big gap here. So selling the 1970, buying the 1950, I believe it is, yes. But you're going to need to get it at 115. So if you're going to do this, put this in at 115, because you want to collect at least $50 to do this trade. And you can see that this is really far away percentage wise, and you're not trying to do the standard Dorian Way trade on this because the account is small. You're just trying to put on a trade, collect at least $50, get in and out of the trade with the win. All right, so if you wanted to do this trade and you had a bigger account, you can just increase the contracts if you wanted to, something like this, and it'd still be a pretty good trade. But I like the next trade I'm going to do better. This is 152 that you're receiving over 610. That's not bad at all, actually, with a max loss of under 2,900 there, as you can see. All right, so this next trade is a yellow highlighted trade. We are doing 43 days in the RTY. We're turning this into an Iron Condor. On the call side, we are selling the 20. Let me get there. Yeah, the 2520, which is the 6 delta, buying, I believe, 40 points higher, which is a 2560. And so on that side, we're collecting about $60 before fees and commissions. On the put side, we were going back to that 1970. So selling the 1970, but this time we're doing a little wider. So we're doing a 40-point wide spread, and we're selling the 1930. Excuse me, buying the 1930, and you can see here. So I like this. I was saying at least 315 is trading for 325. This is a yellow highlighted trade. We will hedge the put side on this to give us even more probability of winning here. So I like this. I'm actually going to do this one right now. We're going to hit this and see if we can get filled, and that is 325. And this is what we're offering here. This is the mid. So what we're going to do is change that a little bit and see if we drop this down. Let's say drop it down to 320. See if we get filled. It's going to be 346, and we're going to send that, and no love at that 320. And so I'm going to let that sit for a second, everyone, and we're going to go on, and we're going to move on to this gold position that I was looking at. So you can see that gold has dropped a decent amount today. Gold is down about, it was down more than this. It's down about 2% here, as you can see there. And I know it's hard to see on this Thinkorswim platform, but let's go over to gold. And I was pondering on not making this a yellow highlighted trade, but I decided to anyway. So we just got filled on that RTY. All right, so now we're gonna go into the IWM based on the information I sent out. We're gonna go to the IWM, and we're gonna hedge this put side. We received about $146. We're only gonna take about $30 and hedge the put side. I believe that was 43 days ago. So we're gonna go in this IWM, and we're gonna go to the 43 days. And then we're going to go around at or near the 30 delta. So this is the 29. I'm going to pick this 29. I'm going to do a 1 point wide. That's going to be about $23 before fees and commissions. After fees and commissions, 26. We just got filled right away, so we got our hedge on for that. Now we're going to go back to this gold over here. We're going to look at this, and you can see that gold has been going up. It was above its 200-day moving average and above its 50-day moving average. Once again, the 200 is this gold, the 50 is this bluish line, and you can see it's a big red candlestick today, right? So it dropped quite a bit, giving it back several days a day. But I want to take advantage of that and actually go a little bullish on this gold. And I put this as a yellow highlighted trade 54 days ago. You can see I already got it geared up here. And on the put side, excuse me, my voice is losing my voice here. We're gonna go with a 20-point wide spread, and it's the 10 delta. So we got a 90% chance of winning at expiration. You can bet that that's higher if we get out of this at 50% after fees and commissions. And I was saying this morning, you want to get at least 130 for that. It's 120 right now. So I'm going to put this at 130, everyone, and and I'm going to send this one as well. And if we don't get filled by the end of this call, then I'm going to, if I get filled on something else, then I might not do this in the demonstration account here. All right, so jumping over here, sending that to 130, and we'll see if we get filled. And now let's go to the ES. This is another yellow highlighted trade. This is our second to last trade right now. I'm going to show you a trade in AMC. Hopefully that's still a good trade. But now we're going to go to the ES here, and it's a yellow highlighted trade 40. This is an Iron Condor, and we're doing 57 days out this time. So we're going to go here, and what we're doing on the call side, everyone, is selling the 4,500. So way up here, way above its all-time high, because it's not too far from its all-time high. It's about 40 points from its all-time high. So we're going pretty far out, and we're going to do a 40-point wide spread on this one as well. So we're collecting about $83 before fees and commissions on the call side there, as you can see. And then on the put side, we're going to go all the way down to the 3580. And all the way down there with the 3580 is around the the 7 delta, and we're going to buy the 3540. So we're going to keep it 40 points wide on both sides. We're going to try to get at least $3. It's trading for 310 right here. You can see that this is a pretty good trade buying power wise for this account. So I'm going to execute this one as well. I like this trade. It's a very high probability Iron Condor, and let's rock and roll on this one. It's gonna collect about 141 if we can get filled at the mid, and I doubt that, but we will go no lower than the $3 mark. So let's go back over there and let's see what happens if we drop this down. And we're gonna hedge the put side, everyone. You know, this is why we're calling this a yellow highlighted trade. So we're gonna drop this down to 305, see if they fill us. They filled us right away. We got about 137. We're only gonna take about $30. We're not gonna use 30%, right? So you can use 10 to 30% of what you receive to hedge. Most of the time we're closer to that 30%, but in this case, I'm going to use about $30. All right, so going to the 57 days after I'm going to this micro options to hedge. We're going to go to the 57 days. We're going to go to the put side to hedge this Iron Condor, and we're going to go around the 30 delta. And you can see we got some stuff already here at this at the 32. Let me just see what this looks like if I put this back on the 32. That's about $28. And if I move this like this, I don't care if it's off. I mean, it's weird, but if I did that, that's a little bit more than I want. I did this, that's about 26. And go like this. I'm not gonna have to move it. I'm gonna do anything with these anyway. That's about $32 or $30 after fees and commissions. This is less than the 30%. So let's see if we get filled here. And no love there. And we'll get filled right now. If we hit this, if we make it up to 550, should get filled all the way. So we use $31. All right, so we got filled, and that's the trade that we wanted to do with that one. So let's look at AMC, everyone. Let's go to this. And once again, this is super speculative. This is just if you have an urge to play this. I was looking at a trade in this here a second ago. So you can see that it jumped all the way up to $72. It's just like that GameStop crazy. It's ridiculous. It was just a little while ago under $10. So I'm betting that maybe it's not going to go back below 30. You can see 30 here. I don't know if that's going to be correct or not, but let's look at a good trade that you can potentially get. If you can get filled, it's, you know, you risk one to make one, basically. So this is the trade here 43 days ago, and if you get filled at the 252, you get $252 with the possibility of losing 248, right? So your probability of success, because of this volatility, it's saying it's kind of throwing it off, meaning that we're at the 14 delta based on this, but you can see this volatility is like 300%, right? So it's not going to go to zero, not yet, but so I believe the risk is the upside, obviously, but it's dropped quite a bit today based on that. But I think this can probably be a decent risk reward trade. Anyone interested in doing this trade?
Brian, I want to do this trade, but it looks like that it's well below within the expected move, right? And 43 days, it seems a little bit too much for this stock, right? It can do anything. It can go to $1 or $1,000.
So it in this case it isn't within the expected move. I mean, it's inside the expected move, and you're correct. It's a lot of time to go, and it could make a huge move up or down. So, but you wouldn't, if you do this put spread, you don't care about it. Obviously, if it goes up, you win. If it goes up, if it stays above that 27. But what you care about is, okay, what's the worst case that can happen to me here, right? So the worst case can happen to you here is that it expires below your 22 strike here, and you lose $248. Okay, that's the worst that can happen to you. The best that can happen to you is obviously it expires worthless and you collect 252, but you know we're not going to hold this until expiration. But if we can get some of the premium to come out of this trade, maybe it's really elevated because it's dropping today and it's been going up so much, and a lot of us think that this is ridiculous.
Brian, I was thinking, how about 15 days? It has not same reward, but it's like 190 to 500.
Okay, let's look at that. 15 days is going to be a little bit more gamma risk, but which strikes are you talking about?
Same strike.
Same strikes. Okay.
27, 22.
Yeah, I'm sorry, I went too much. So 22. I actually like your trade better, Steve. I like your trade better. This is shorter period of time. The risk is only about 50 to $60 more. And if it's not going to go to 27 in 43 days, it's not going to go to 27 in 15, right? So I actually like this one. Just for giggles and let's just put this in a little bit. Let's put it in a little above the mid, sit there, fill us, right? So that 195, I'm going to send this here, and that just got filled.
The volume is crazy. It's like
Yeah,
2,000
yeah. It just dropped a little bit, another dollar or whatever, but that's fine. You have to be okay with the fluctuation and so forth. So I'm not gonna adjust this, guys, based on our normal adjusting processes. I'm gonna let this play out because I'm gonna see if this delta works out for me, right? So I'm okay with losing that $300. We're not gonna lose $300 if you follow this, but I'm okay with doing that. So that's the trade. This is just once again, this is not a yellow highlighted trade. This is not a recommended trade. This is just complete speculation, fun engagement type of trade to see if you can make some money off this. And so I appreciate everyone's feedback and things like that. And it looks like that that AMC is not, they're not going to give it to us at that 25, at least not yet. So I'm not going to force it. I'm going to get that 25% if I get out of it today. And maybe it will settle down and give me that 25 later today. If not, maybe tomorrow. All right, everyone. I just want to let you know that we got filled in that AMC position. And so we're in and out of that AMC with 25% gain, but AMC is about to go positive. So, my finger of getting out of things really quickly is maybe it's something, it's a bad thing today, but I'm going to stick to that. No reason to. It was all speculation anyway. We got $49 out of it, and now we just move on, right? So that's the nature of that.